Hello, investors. Welcome to the Impact Podcast with Taiwo Balogun. In today's episode, I'd like to ask you a question. Do you know that the prices of gold skyrocketed under Trump's first tenure in the year 2017? And the question now is, what next for investors in his second tenure? And one of the things that I also want to call your attention to is that in this video, we will dive into the factors that are driving gold's recent rally and also explore the potential implications for investors from the impact of the trade wars, and monetary policy to the role of geopolitics and market sentiment. You can see what is happening between America and Mexico, Canada, and also China. Yes. And also, we will examine the key trends that are shaping the gold market. Whether you are a seasoned investor or you are just starting to build your investment portfolio, this will provide you with a comprehensive analysis of the gold market and insight to help you make informed decisions. But I need to sound this disclaimer. This is not a financial advice, but it's going to help you to make informed investment decision. So what next for gold prices in this second term of Donald Trump? Watch to the end because you're going to be getting value from this video. And I also want to appeal to you, like and share this video. Now, let's dive in. During the first tenure of President Donald Trump in office as the US president, the gold prices experienced significant growth and volatility due to a combination of economic, geopolitical, and market factors. And I'll be breaking down 5 factors for you to position yourself, because one thing that I saw that is taking the same shape or trend, unlike 2017 and also 2021, is that a lot of central banks are buying gold right now. Yes, they are buying a lot of gold as safe haven. And now you may want to ask, what do you mean by safe haven? You see, whenever there is indicator that the currency of United States of America is going to crash, or that the United States of America as a nation is going to go into recession, there is what we call sentiment. There's what we call investor sentiment. And one of the things that they do is that they shift from investing in the United States of American dollar to buying gold. And that means that gold will now serve as their safe haven asset. So breaking down the details for you to understand what is happening and why you should position yourself right now is that, number one, the initial price of gold during Trump's first tenure in office in 2027 was around $1,209 per ounce. And I'll be showing you that on my chart very shortly. Now, in January 20, between January 2017, we had something that shook the whole world by surprise when the price began to move up. This is the gold chart, and we are looking at it from here, 2017. Look at 2017. In fact, let me show you something here. Like, as in, from 1993 up to this day, the gold trend has been on uptrend. Now, let me show you what happened in 2017. Before Trump came into the office as the president in 2017, look at what has been happening. Look at what happened to the gold. Did you see that? Now, between 2012, October 2012, the price crashed a bit. And in January of 2016, the price began to move up. Now, this is 2017. In January 2017, this is January, let's see, 2017, this is January 2017 here. From here, the price began to go up until Donald Trump left the office in 2021. Look at, in 2021, the price went up to this level. Now the price went up to as high as 2070 dollars per ounce. From then, President Biden took over the office and the price crashed a bit. And from 2022, October 2022, the price has been going up. Now, what does that signify? It signifies that the price of gold has been consistent for the past how many years now? Do the calculation. Looking at that, we also need to look at another reason why you should position yourself to buy gold as part of your investment portfolio now is because the substantial price increase during Trump's first tenure. And that was what I showed you, that from that price, look at, from that price of $1,209 per ounce, the price went to $1,839 per ounce. And you know what that means? Let me show you. It marks, you know what it means? It marks a substantial increase during his first tenure or his first term in office, which represents an overall gain of over 50% during his first tenure. Yes. So now looking at this from here, 2021, this is 2021, January 2021, the price went to as high as, as high as $2,053 in January 2022. In January 2023, look at 2023 January, the price went as high as $2,018 per ounce. And 2024, what happened? January 2024, look at what happened. The price was at $2,247. And from then up to this January 2025, the price is now trading around $2,914 as at the recording of this video. What does that mean? It means that very, very shortly before the end of this year, it is projected that gold is going to cross $3,000 to $3,500. According to my own analysis, this is, like I told you, this is not a financial advice. According to my own analysis, I'm seeing that the price of gold is going to go up with another like 40 to 50% increase before the end of 2025. And how do I know? How do I know? Now, you see, whenever there is trade war with China, especially China, there is going to be a lot of investors are going to be sentimental about their investment. And a lot of investors, investment bankers, and even central banks will be shifting from dollar to buying gold. And you know one of the reasons why they do that? Do you know why? Let me tell you why. One of the reasons is that, you see, gold volatility is always affected by the combination of economic, geopolitical, and market factors. And if you look at these three factors, Donald Trump has been tampering with these factors since his second term in office. So let us look at another factor. Yes, another factor that signaled why gold is going to go up to as high as $3,500 to $3,700 between now and the end of the year is that when you look at what happened during the pandemic, yes, the pandemic is another major factor that increased the price of gold. Now, before the COVID-19 crisis in 2020, the gold prices reached all high price of, I think, $2,075 per ounce in August, between that price in August. And it was driven by global economic uncertainty, you understand, coupled with the fact that there was massive fiscal stimulus during that period. And also, there was also a flight of safe haven assets, which a lot of central banks also bought gold around that period because, dollar was shaking. The dollar index was shaking. I think we need to quickly look at dollar index at the moment so that we know what we are talking about. Now, this is the price the current price of gold, but let us look at dollar index and see what is happening. DXY, this is DXY. Now look at the dollar index. Now let me bring it down. Let me bring it down to see what is happening. Let's see 6 months chart. Let's look at 6 month chart to see what is happening to the dollar index. Now look at what is happening to the dollar index. Now this is the price. Now looking at this price, this chart, you see that the dollar index has not been stable. The price, when you look at this trend, is still on the downtrend. This is a downtrend trend. Let's look at it. Look at, this is a downtrend. The trend is still down. And looking at this, you see that dollar index doesn't have direction at the moment. Now look at, it doesn't have clear direction at the moment. Let me draw the second trend line for you to see what I'm trying to show you. Now you can see it. Look at what is happening. Look at what is happening here. Did you see that? So looking at this is like trendless or downtrend. But however, when you look at the gold trend, the gold chart, you see that, look at, even on the 6 month chart, you can see that the price has been up since 2000 and, 2000. It has been uptrend, and this is it. Look at it. Look at it here. So did you see that? Looking at that, this is uptrend. This is what we call uptrend. You see that. Now let's change it to like 3 months chart. Let's see 3 month chart. Now look at 3 month chart. It is still uptrend. So looking at this chart, you see that the performance of gold, even after 2020, as in after the global pandemic of the COVID-19, the gold traded all-time high to as high. Okay, let me show you that. 2020, look at, as high as in August. This is August, October, June, July, August. Between this time, this is August, July, August, it was 2000. Look at 2075. This is the candle, this one that is showing my hand. That's the candle, and that high was $2,075 as at August 2020. You understand? But before that's pre-COVID, before the onset of the COVID pandemic, gold was already showing signs of strength due to various microeconomic factors. Yes, due to a lot of microeconomic factors such as trade tensions. There was also trade tensions at that period, and also geopolitical risk and concerns about global economic growth, like what we are seeing now. You see what Donald Trump is proposing concerning Gaza, and all the Arab nations are against America taking charge of Gaza. And you know what that means? I don't want us to go there. So now, looking at the pre-COVID period and looking at the price, and also what happened, we saw that gold was acting as a safe haven during the escalating US-China trade dispute. And also then there was Brexit related uncertainties, which drove investors toward Meta as a hedge against volatility. And the same trend is also happening or is forming now. So with what is happening between the trade war between US and China, you see that it is an indicator indication that there's going to be spike in gold. So for those of you that are trading gold spot, I mean, if you are trading using a platform like forex brokers, or any brokers, or trading view, you are trading with any broker, you are trading spot, trading live like this, as in you are trading live spot market like this, you do not trade against this trend, this uptrend that you are seeing. Yes, in every uptrend, there's going to be in every major trend, there's going to be minor trend. Now, this is a major uptrend. There's going to be short reversal or pullback where you'll be seeing prices coming down a bit. Don't say that the price that gold is crashing. No, It's only retracing or pulling back to gather momentum to continue the trend. So if you are trading the spot market, please do not trade against the uptrend. If you see any major pullback or reversal, position yourself to continue this with the uptrend. However, now let me now come back home to my people within Nigeria. Let me come back to you now. Make I speak our own. See, if you are a woman or a lady that have some gold at home, please do not sell your gold at this moment. Instead, buy more gold, acquire more gold. You can, and you women, you know how to buy gold now. You can buy from abokis or buy from your friends that want to sell their gold, maybe on the island, wherever they are. Or if you're in Dubai, if you're in America, wherever you are, see how you can acquire more gold right now. Because locally and internationally, the price of gold is going to skyrocket from now. And the trend is going to continue to the end of this year. As long as there's a geopolitical issue across the globe, and as long as there is a trade war, the trade war is going to be intense because Trump has thrown another bomb on tariff for importing steels and metal and aluminum into America. And Canada is ready to retaliate. China is also retaliating. And once that is happening, you know what happened? The gold market or the price of gold is going to be stable, is going to be going up. So, women in Nigeria, wherever you are across the globe, if you are in Ghana, go and begin to acquire gold from local miners or from those goldsmiths. In fact, you can be a friend of goldsmiths or goldsmither, those people that mine, that smith gold. You understand? And those that mine gold, begin to buy raw gold from them, but you need to learn how to differentiate between 1 carat to another. I mean, 18 carat, 20 carat, 22 carat, 24 carat, and if you know a geologist, yes, a geologist can also put you through. They can guide you to identify the genuinity of raw gold. Please do your due diligence and make sure you add gold into your investment portfolio this year. So as I wrap up this video, I want you to please take action today. And the first action is consider adding gold to your portfolio as a hedge against uncertainty. Whether it is physical gold, whether it is ETFs, whether you are mining stocks. There are mining stocks. Yes, I think I will begin some tutorials on all these things. Physical gold, ETFs, mining stocks. Then there are plenty of ways to invest in gold. Yes, please. The number 2 thing or the number 2 action that you must take after watching this video is keep an eye on microeconomic trends. Things like inflation, you understand, interest rates, geopolitical risk. All this can drive the prices of gold higher. So watch out for all this. Inflation is going to happen seriously in America. And once it happens, the prices of gold is going to go up. And the the brother of gold will flow alongside gold. What is the brother of gold? It is silver. If you don't have money to buy silver, to buy gold, go and begin to buy silver. Because as the prices of gold goes up, as the prices of gold goes up, silver will follow through. So this is a strategy that a lot of investors used to take advantage of. And the number 3 thing that you must take action about today is that don't panic during market turndown. Yes, do not panic. If you see that the market is crashing, don't panic. Instead, view them as an opportunities to buy gold at low prices. That is the best way to position yourself. Yes, for those that are trading gold spots, now please don't be afraid when you see that the prices of gold is crashing. Instead, position yourself, let it crash to a level, and look for possible good entry to enter, buy again, and buy low and ride with the profit. So on this note, remember that gold isn't about getting rich quick scheme. No, it's about protecting your wealth and staying prepared for whatever comes next. On this note, I want you to watch this video that you're seeing on the screen is going to help you on various investment vehicles that you can put your money in the year 2025. So till I see you in the next episode of the Impact Podcast with Taiwo Balogun, keep on investing and keep on winning. Bye-bye.